Good morning, guys. Welcome to this Tuesday, March 3rd. And I'm still fighting a cold, as you know. A little bit of coughing and stuff like that going on. But today, overnight is since come back in. Yesterday looked like it closed pretty good. The overnight was, I guess, risk off. Big move to the downside in the overnight. Nothing really occurring, which would cause that. Oil spiked up to $77. That's most likely because the issue around that Strait of Hormuz right now, if it's closed or not, and if anyone wants to take, they can. Right now, there's no oil going through there temporarily, and the question is how long that lasts. That's going to be directly impacting oil prices in the near term. And I think someone said that the price oil on the marginal barrel. They said I guess short-term disruptions could really spike the prices like that. But it's nothing else you can do about that right now. It's going to be what it is. I think there's a plenty of supply out there. There's going to be short-term disruptions, and that's going to be kind of jerking around that price of oil for a bit. Overall, though, as you can see, the overnight is to the downside. We were all right back here at the 67.50s again, testing that support area. Took it out a little bit. They were down here all the way down to the 67.40s, and they back up a little bit. But a pretty good move to the downside in overnight. Now, last night we said if they start taking out that 68.55 and 45s, those are the two levels you're keyed in on. And if those comes out, yeah, then we're going to start worrying about the short side. Yeah, well, okay, we're worrying about the short side now. So we're on the short side, short end of this. We'll see how the day session. If the day session runs it right back up into value, and then I think it's more European overnight, Asian, those markets which are kind of creating this overnight weakness. Now the overall across the board the markets are down. I mean, everything is red on the stock market. Looks like in the pre-market. So risk off is kind of is kind of the field to get started. The news this morning is non-existent. There's nothing going on right now. I don't have any news listed today coming out. Tomorrow, though, ADP, PMI Composite, ISM Services, all coming out tomorrow. That's Wednesday. Thursday, we get productivity, and Friday, we get an employment report. So Friday is going to be interesting, an employment situation and retail sales as well. So, but that's Friday. Right now, the big thing leading on the markets is going to be uncertainty, and whatever the market can figure out or react to. Now, it's just so you know, conflicts like this doesn't impact the market directly. Or how should I say it? It usually it's just a knee-jerk reaction, risk off. I don't know what's going on, sell everything, kind of that kind of reaction. There's nothing really fundamentally changing because they have this conflict going on there. Commodities like oil, yeah, that is directly impacted. So that pricing I would watch carefully and be try to trade it. If you if you try to trade oil, you're going to be all over the place. That's going to be jumping around and be pretty untradeable, I think. But it's the general market for this is going to be more of a knee-jerk reaction. It's going to be a period of time of uncertainty in the market. You see various whipsaws back and forth as headlines comes out in the market. Does the reactions, but nothing fundamental has changed in the economy, the market's earnings, or anything like that. And that is what really drives some of the market. So I would just the way it looks right now, I would just start from the short side and see if the market's going to be more in the risk-off mode today. If it starts trading up above that London high at the 68.15s, I would be more inclined to look for a retracement trade. If they can get up above that, the 30 and 45s, I would be starting to think long side or retracement back to the value here. They had to get up above this 68.50, 55 before that kind of gets confirmed. But this whole area here, I would look for short setups on the way up, see if they can take it out or not. And on the way down, I would not be looking to buy very aggressively at all. So Not this been not quite that we are at the support big support area in the bigger picture 6760 area here. It's from like the 6745 up to the 70s. This area on the F1, and they probably right now in the overnight they were down here yesterday or in the overnight yesterday as well. So far it's holding, and we just have to see if they're going to try to take it lower from there. It could be an excuse for general market makers to try to make it more risk off, kind of to kind of grind the market down to get better pricing to buy back into some of these stocks they want to get into. That would be the market makers' way of looking at it. Risk off, try to run it as hard they can to the downside, and then see, and then start picking stuff back up again. In the short term, I'm not doing anything. I'm just kind of sitting tight and waiting for the craziness to kind of pass. So looking to buy weakness with a lot of caution. That would be against the support area at the 68, 67, 70s, 50s, 67, 40s down here. I would not be super aggressive on these. I mean, there is a support area here, but if it's a risk off and we're going to see it taking it lower, then I would not be. They're going to be running over those areas anyway. If you get early strength, I would look for short setup for rotations down. That's going to be my default trade for today, at least to get started. Looking for short setups against that 6800, 6815, 6830, 45, 55. So these areas here. And so if I get some early strength, that's going to look for those short setups. Now, if they keep going, depending on how strong it looks, I'm going to be not like stepping in front of it, kind of a trading it. It's waiting for a setup where it stalls, backs off a little bit, tries to take it higher. It may happen within a bar, but you had to kind of watch that carefully when it happens. But I'm looking for a little bit more of a stall before I try to get short on it. Because I mean, it's as you saw yesterday, there was like a risk off overnight, and then he has to absolutely run it right back up, and there was just no mercy on that run up. So you had to be a little bit cautious about it. But these levels on the way up could present nice short opportunities if you're going to see more of a risk off kind of day. And if they can't do it, if they start taking out the support, especially this 6750 area, but taking out these lower areas, at that point it's going to be at, yep, stay on the short side, see how far they want to take it, because they're going to try to run it lower at that point. So that's how we get started. I mean, it's going to be like this for until they sort out the bigger picture there, and just kind of the dynamics of the situation, I guess. So that's the ES to get started. So looking for shorts against the 6800, 6815s, 30s, 45s, 55s for rotations down. If they can get up and clear that 55 again, we'll be right back up in towards value. And as you can see here, if you can get up above that 6830, that at least we're getting back into an area where we have a shot at recovering. But I would, as I said, still look for short setups against these levels and see if if this is going to be if they're going to be able to hold and take it right back down again. So it's anyone's guess. I mean, this things like this, geopolitical events are hard to predict. You just have to be kind of nimble about it and expect the volatility, not overreact, and there is no fundamental reason the market needs to sell off in these circumstances. More of a risk off, move to gold, I'm scared kind of dynamic going on. If you have if there's something specific happens against the stock market or anything which has an economic impact, yeah, then you have a reason. But right now it's just not much going on with it. I mean, you can argue the indirect reason if oil spikes and stay high, yeah, there's going to be an economic impact, right? But that's not that takes a while. So if you have a couple of weeks of oil in the 80s or 90s and it comes right back down again, that's going to be more of a blip. So looking at the Nasdaq, and that guy, it's big risk off kind of thing going on there. We're right back here. We've done a testing at the 400 level of support. Again, right into the support area, bounced off it. Risk off still. I would look to sell strength, same as I did for the ES, against the 24,600s, the 670s, 730s, 790s, 850s up to the 890s here for rotations down. Now, if you can get up above I think let's see what we said here. If you can get up above this area right here, the London high 680 700. I think we have a shot at getting back into value because you can see Nasdaq didn't take it that much lower. The ES was a lot more on the receiving side in the overnight, but you see Nasdaq they haven't really traded higher a whole lot, so they had their bulk of values right here at the around the 24 800 25,000 level. And so they're just probing to the downside. And if they can retrace it back up again above this London high, the 670, 700s, I think we may have a share. I will give it another level higher, about the 730s. I would start thinking that, yeah, we're back up in value again. So, but I'm gonna give it up to the 790, 800 here before I really change my bias on it. Because if it's risk off, I mean, you can see some strength in Nasdaq always freaking runs it higher than you think. So you have the obvious levels against that the 600 and then 680, pretty obvious levels. It can run it up to the 730s and the 780s fairly easily as well. So and then but still you have to turn it around and run it right back down again. So I was looking for short setups all the way up there before I start getting a bit more before I take off the short bias. So that's how we get started. On the way down, looking to buy weakness against the 470s, 420s, 370s. Yes, a lot of caution there. If they're down there and they're going to be running it lower, it's going to be there is going to be no rush to get long against that. So you have plenty of time. And if it starts stalling, starts churning, that's when you have an opportunity. So, but but in risk off mode, if it's going to be in one of those days, then you just have to stay on the short side of it and try to get short. Right now, it could go either way. So I'm just going to be watching early on here as the day session kicks in for early strength. Excuse me, for early strength. And if that strength keeps going, yeah, then we are having the same dynamic as we had yesterday, heading right back to value. And if not, if they run out of gas at one of these resistance areas, then we have a shot at a potential short or another move to the downside. So that's what my plan for today is. And then just gonna hope I can stick to it and not get myself caught up in any moments. That is the issue, right? Getting yourself caught up in a moment, taking a trade which is not quite there. It just looks good, like take the shot, My psychology is just get. I thought I was a gambler first, but I mean it's not quite there. I'm not quite a gambler, but I just want to take the shot, and this and without and if you don't do it with and for if you don't have the setup like idea level setup and trigger, if you don't have the idea and the level part, the rest could go your favor, could not. It's just not very high probability. So sometimes you get lucky a couple of times and you get caught up in yourself, and that's when you get hammered. So sorry if I shared a little bit there, but that's how it goes. So on the bonds, it's nice move to the downside. So they're heading lower, heading back down, yields coming back up again. And so this whole move we had, if you look at capital flow here this is capital flow. We are heading right back towards that 115, 114, 115 attractor point right now. So there you have it. Fold this together, and we are heading right back down here. Next attractions can be done at 115 here. Low volume area at the 116, but right now it looks to me like the yields are heading higher and markets are just heading back down here towards these levels. So I was trade bonds on the short side right now, looking for spots to get short for rotations down. And the attractor, you have one low volume area around 116 and then a attractor at 115. So that's kind of where they're heading. But you can see this looks very much like institutional selling going on right there in overnight. And now we're pulling back, nice reverse retest. So they're stalling here right at the mean, so at 117. And but I'm just going to wait for the day session to kick in and then see where they're going to go from there. But right now, yeah, it just kicked in, so let's see what the bond market is going to do. But I would trade it on the short side right now, looking to sell strength against 1702s, 17.8s for rotation down. If they trade up above 17.8, maybe up to the 17.14s would be the last one. But anything above that, I would just take off the short bias and go back range bound. And I'm looking to buy against that 1624 with a bit of caution. As I said, if I'm trading it from the short side primarily, so I'm not going to be super aggressive on that long trade. But if it sets up, yeah, maybe try to take on. So, and I'm looking for something. What you're looking at right there, that's kind of the setup I'm looking for. As soon as you have three bars forming like that, then you have a potential for a stall like that. Now, a move up like that, two bars like that, usually it could work if you're at this resistance area, but sometimes it doesn't. I mean, because they're going to look exactly like this when they run it higher. Like if you look at this on the way down, you have three bars lower, and then you see it with two bars lower, two bars lower, two bars lower. So it's an illusion. You can see your eye spots it after the fact, but and you can see, yeah, I would have done that. No, you wouldn't have, because when it looks like this on the way down, you could have stepped in front of it 5 times and lost money. So you just have to get that little bit extra confirmation before you step in. Anyway, so that's the bonds. That's trading that from the short side to get started. Uh, yeah, strict rules and start must. Yeah, I know, Miel. I know. My psychology tells me that, or my mind tells me that. My psychology is I can keep taking those pot shots. I can't help myself. That's usually it happens when you're a little bit distracted. You're doing something else. You look up and you see something on the screen. That's when you forget your rules and take the pot shot. And it's like, ah, the worst can happen is you succeed. Yeah, to take the pot shot, it works out in your favor. It's like, yeah, cool. And then next time you just do it again. So it's trading. It's like it's an endless battle with yourself. That's what it is. Anyway, guys, so that's how we get started today. We'll wrap it up there. So I will see you guys back at 11:30 for the next update. So good trading, guys. I'll see you back then.